Hello and welcome to another update video about ADA. So also ADA has made a bit of a comeback here. Don't get me wrong, this could still be an overshooting X wave, which would eventually come down. The general sentiment, however, in the market and looking at what Bitcoin is doing, looking at what Ethereum is doing, and especially the breakout above the recent high, make me consider that the wave 2 here, which we've had down here, was probably already finished down here. So the problem with this structure, and also why I didn't go for it initially, was the strength of the decline and the corrective move to the upside here. Now with corrective, as you know, this can also always be a leading diagonal, which it probably was in this case, which is obviously hard to detect, and therefore I was in favor of this being a corrective move to the upside. However, did mention to you yesterday that should we break, no, even today, if we break above the 33.7 cent level, that would be like a breakout point for me, especially if we hold it now. So obviously we need to hold it. Yeah. If we get above that level, it would shift the probabilities towards a direct breakout. And therefore, as the chart has changed, we have to adjust the wave count here accordingly. I'm going to take the support box out down there. And if that is the count, 1, 2, then this would suggest we are now on track in a larger wave 3, most likely. I will observe this over the weekend, and if I see sufficient evidence, I will change the higher degree or higher level count. Would then, if we push high enough, which would be a move above the 40 cent level. Yeah, I want to get a move above the 40 cent level, the 78.6% retrace. If we get that move, I will change the higher level assumption to 1, which would be in favor of a more direct breakout, and would then make the sell-off scenario, which would still be in favor of new lows, only the alternative pattern. Yeah, so that's obviously at the moment the direct breakout is the alternative, because the higher level structure for me still is not convincing enough. But obviously what we have to say is we broke out of the channel, which has bullish implications. What we haven't done though is take a relevant high out on the daily time frame. So obviously I can go to the daily here. A very relevant high is the last wave 4 high. Now we don't necessarily need to take it out. I mean, taking it out at 44 cents would be an even more bullish scenario. But if we retrace more, then the 78.6 retracement of that move to the downside here that started at 44 cents on the 6th of November, then it makes this 1-2 setup to the downside very unlikely. Now at the moment we see a lot of green candles. It looks very impulsive. It looks, in my opinion, different to what we did here, which was a wave 2. So that's why I'm thinking the structure doesn't really align at the moment with the view that this is only a wave 2 correction. But we'll see, you know. Obviously we talked about upside, we talked down here about upside, we talked about it could be substantial upside that gets into the higher 30 cent region. And we're doing that. However, we are doing all of that without any sort of strong retracement. And that's obviously important in any analysis. If we see that the move up is starting to look more impulsive than it should be in the preferred scenario, then the higher level scenario needs to be challenged, obviously. And if I get enough evidence, I will do so. At the moment, I will go with this scenario, see if it works out. This is a 1-2 setup now, and we are then therefore moving up now in a third wave. I will move that higher not to confuse people, just to move it out of the way, really. It would indicate, based on this, that we should get this third wave to the upside now. Obviously, as you can already see, if this works out, no, let me think. Yeah, if this works out, then we are certainly going to move above that 40 cent level. But before we do that, we've got the lower level waves, or waves here on the lower time frame, which is here the wave 1, here the wave 2, and then we should now move higher in a third wave, fourth, fifth. This is relevant as long as we're holding the wave 2 low here in orange at 32.4 cents, which means the preferred scenario at this moment is that we should see a move to at least 35.6 cents in this third wave. But again, that is the minimum target. Let me think. I might have drawn them. 1 second. No, might have made a mistake here with the fib extension. So I need to start down here, obviously at the beginning of this leading diagonal. Go down to the low of the wave 2. Yeah, that gives me a different target. Yep. No, I didn't want to give you a wrong target. So it's here at least 36.8 cents. But as we've seen in the last few days, basically what I mentioned many times before, that when some kind of a bullish rally starts, these have to be understood as minimum targets. So for example, here we've got a 1.618. 1.618 is sort of what we've seen now throughout the bear market, a lot for a possible wave 3. But if we get into really bullish, into a really bullish time period, then you can see also the 200% extension and the 2.618 extension, no problem. So be prepared for that. But at the moment, I'm going to go with this. Let's see if it works out over the weekend. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.